This is Nightly Business Report with Bill Griffith and Sue Herrera.
Getting closer, Wall Street nears new records on renewed hope of a thaw in trade tensions.
Retirement lifeline. Lawmakers are rolling out different proposals to shore up Social Security, and they want to raise certain taxes to do it.
Flood risk. Private insurance startups are entering that market using big data to lower the cost of insurance. Those stories and much more tonight on Nightly Business Report for Thursday, September 12th.
And we do bid you a good evening, everybody, and welcome. Lucky 7. The Dow today extended its win streak to 7 straight, inching ever closer to an all-time high in the process. Investor sentiment got a lift on a potential easing of trade tensions between the U.S. and China. And after the European Central Bank this morning unveiled a sweeping stimulus program. Those two things sent stock prices higher today. The Dow rose another 45 points. We're at 27,182. NASDAQ added 24. The S&P was up 8. Now, as with most things these days, the reports on trade were not exactly straightforward. First, there was word that an interim deal to delay tariffs was being considered, but other reports said that's not the case. It created some volatility in today's trading session. So we asked Kayla Tausche to find out what might really be happening behind the scenes.
There's still a month until top decision makers from the U.S. and China meet to address the ongoing trade war. And while the White House says there is absolutely no interim deal being discussed, two people close to the talks say there is a clear desire for de-escalation on both sides. Ambassador Robert Lighthizer, Treasury Secretary Stephen Mnuchin, and NEC Director Larry Kudlow, these people say, want to find a way to get back to tariffs on $250 billion in goods, rolling back recent tariffs on consumer items from September, and avoiding an escalation later this year, right before Christmas. Washington wants to avoid any self-inflicted economic wounds as some cracks start to appear in U.S. data. Farmers who have been hard hit in the trade war could get some relief.
We expect and we want them to buy agriculture. We view that as a personal attack on our farmers. They need our agriculture, and they've always bought our agriculture. So this isn't about just selling them soybeans, but we do want to sell them soybeans. I want to be clear that our farmers and our fishermen are important to us.
The terms of this détente haven't been agreed on or even presented to President Trump, these people say, but China cannot keep boycotting buying U.S. pork as its hogs are hit by African swine fever. Any short-term handshake wouldn't sidestep the hard stuff. Talks over China's forced technology transfers are expected to continue, with White House officials preparing for protracted negotiations there. For Nightly Business Report, I'm Kayla Tausche in Houston, Texas.
Last night, the U.S. and China both appeared to have dialed down their trade fight by offering some small concessions. Eunice Yoon tells us how that's playing out in Beijing.
The Chinese Commerce Ministry said that China welcomes President Trump's gesture. President Trump had tweeted that the decision was made at the request of the vice premier and due to the fact that the People's Republic of China will be celebrating their 70th anniversary on October 1st. The tariff delay from October 1st to the 15th is unlikely to be meaningful for affected companies, but would be appreciated by Beijing, which wouldn't want to see distractions on the anniversary of its founding. To add to the positive atmosphere ahead of the talks in October in D.C., the Commerce Ministry said that Chinese companies have started making inquiries into prices for U.S. agricultural products like pork and soybeans after purchases had previously been suspended. Despite the good vibes, longtime China watchers still believe that the gap between the two sides on the fundamental issues is vast. So they're cautious that there'll be more than a truce. For Nightly Business Report, I'm Eunice Yoon in Beijing.
As we mentioned, investor sentiment also got a lift from that European Central Bank action this morning. It announced a major stimulus program, cutting a key interest rate and outlining a plan to buy back bonds. The whole strategy is aimed at protecting the already fragile Eurozone economy from getting hit further by a global slowdown.
The Governing Council reiterated the need for a highly accommodative stance of monetary policy for a prolonged period of time and continues to stand ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner.
The ECB joined central banks around the world, including our Federal Reserve, that have been lowering interest rates.
The budget deficit topped $1 trillion in the first 11 months of the fiscal year, and that hasn't happened since 2012. According to the Treasury Department, higher military spending, rising interest expense on government debt, and weaker revenue pushed the deficit up nearly 20% compared to the same period a year earlier.
Consumer prices rose slightly in August, even after a decline in the cost of gasoline. The Consumer Price Index, which measures what Americans pay for just about everything, was up 0.1% when compared to July. That was pretty much in line with forecasts. But the core prices, which exclude food and energy, they have climbed 2.4% in the past year. That's the fastest annual pace we've seen since July of last year.
And the economy promises to be a big topic during tonight's presidential debate. Ahead of that debate, Senator Elizabeth Warren proposed an across-the-board increase in Social Security benefits, financed by new taxes on high-income Americans. John Harwood is in Houston for us tonight. So, John, what exactly is Senator Warren proposing?
It's pretty striking, Sue. She is proposing an increase of $200 per month for 64 million Social Security benefits, all current beneficiaries and all future beneficiaries. And she would, in addition to that, change some of the rules that have penalized lower income Americans, people who were out of the workforce for a period of time. So after a number of years in which people debated how much to try to cut Social Security benefits to make the program solvent over the long term, she's proposing to take those benefits significantly up.
And how would she pay for that, John?
It's got two different tax increases on people with incomes above $250,000 a year. First, a payroll tax. As you know, the current payroll tax is capped at around $130,000, so you don't pay on any income above that. She would say if you have income above $250,000, there's going to be a 14.8% payroll tax split evenly between the employer and the employee. In addition to that, she would impose a 14.8% tax on the investment income of people who make more than $250,000 a year. And you can tell how much money that would raise because the nonpartisan or an independent analysis of her proposal showed that even with those big benefit increases, this would extend the life of the solvency of the Social Security program for another 2 decades. So it raises an awful lot of money, about $4 trillion with those revenue increases.
And what early reaction, if any, has there been to the proposal, John?
Well, various Democrats have been debating over the last couple of years, including Bernie Sanders and Hillary Clinton in the last campaign, some increases in benefits for the lowest income beneficiaries, trying to take care of people who are really struggling to get by on small Social Security checks. What's notable about this is how comprehensive it is. She is betting that that is going to be popular at a time when income inequality has increasingly entered the nation's consciousness. She's also trying to compete with Joe Biden, whose constituency tends to be older, blue-collar, and African-American. Those are the kinds of voters who might find this an appealing proposal. Joe Biden hasn't gone nearly that far yet, neither has Bernie Sanders, for that matter. We'll see if they change their tune on this when they get on that debate stage tonight and beyond.
All right, John Harwood. Thanks so much, Sean.
You bet.
Meanwhile, in Washington, Senator Ron Wyden of Oregon announced his own plan to fund Social Security. His proposal also focuses on the capital gains tax. Yolande Mui has details.
Democrats say there's a 2-tier tax code in America, one for people who earn money through work and another for those who make money by investing. That's because right now, the top tax rate on income from wages is 37%. The rate on investment income, just 20%.
The mega fortunes get bigger and bigger, and they are propelled, they have this kind of jet propulsion behind them, by the favorable capital gains tax rules that go overwhelmingly to the top 1%.
Democratic Senator Ron Wyden is out with a new proposal today to change that. His plan would tax capital gains at the same rates as ordinary income. Most importantly, investors would have to pay taxes on any unrealized gains every single year. It's a major shift that's estimated to raise between $1.5 and $2 trillion over the next decade, money that Wyden promises would go towards shoring up Social Security.
My proposal provides a specific path for ensuring that millionaires and billionaires pay what they now owe, and that revenue is used to save Social Security.
Now, this new system would only apply to taxpayers with $10 million in assets or who make $1 million a year for 3 consecutive years. There's also carve-outs for family farms, homes, and retirement accounts. Wyden vowed that his plan would not hit middle-class families, but it's clear that Democrats are determined to take on the tax code if they prevail in 2020. For Nightly Business Report, I'm Milan Mui in Washington.
And a little bit later in the program, we're going to take a closer look at the issue of taxes and what exactly a fair rate of taxation is.
It is time to take a look at some of today's upgrades and downgrades. Caterpillar and Deere were both downgraded to market perform from outperform at Wells Fargo. The analyst cites weaker demand for new equipment. The price target for Caterpillar is $143 and $170 for Deere. Both stocks fell about 1%. PayPal was upgraded to buy from hold at Canaccord. The analyst calls PayPal a payments juggernaut and says volume growth is impressive. The price target is $118. The stock rose 3% to $107.10.
AbbVie was upgraded to buy from neutral at UBS, with the analyst citing optimism surrounding its acquisition of Allergan. Price target now $79. Shares were up about 2% today to $70.83. And Activision Blizzard was upgraded to buy from neutral at Nomura Instinet. The analyst cited the company's new gaming titles, World of Warcraft Classic and Modern Warfare. Price target $64. Shares rose nearly 1% to $55.45.
Still ahead, DHL goes high-tech for a speedy delivery.
DHL opens its first U.S. Innovation Center as the global shipper turns to robotics and other innovation to compete for e-commerce customers. I'm Frank Holland. I'll have that story coming up on Nightly Business Report.
Income taxes are always a subject for heated discussion during presidential campaigns, and as we mentioned earlier, they are expected to be fair game during tonight's Democratic candidate debate. But one income tax strategy that has not been mentioned so far during this campaign is the so-called flat income tax, where every income level pays the same rate. Steve Forbes, who ran for president twice, referred to it as the fairest income tax. Is it? We have two opposing views on that tonight. Joining us, Leon Lebrecq, who's the Chief Growth Officer at Sequoia Financial Group. He says it is fair. Peter Maluk is CIO at Creative Planning. He says it is not. Thank you both for joining us tonight.
You bet.
Leon,
good to be here.
Leon, make the case for the flat tax.
Flat tax is fair. Everybody pays the same. If I make 1,000 times more, I pay 1,000 times more tax. It's simple. I don't need the IRS. I don't need a lot of bureaucracy. 93% of us could file our tax returns and not even have to do a tax return. And it cuts out all the bureaucracy. And it cuts out the loopholes. Guys who make a lot of money can get out of paying the tax. We can make it a lot simpler for everybody. We did it on the corporate side. We do it with Social Security. It's a flat rate tax. It works.
All right, Peter, you do not think that the math adds up in a flat tax, and you also have some other issues in terms of income inequality. Tell us about it.
Well, I think that the argument about simplification is a Trojan horse. So if you think about a flat tax, right now the top rate's 37% federal income tax. The bottom rate, people are paying around 10%. So if we're going to have a flat tax, let's assume it's not the highest rate. It's not 37%. We're not going to raise it on the huge majority of Americans. So let's say it's 20%. Well, that means that the wealthiest people saw their tax rate come down a lot. Where are we going to make that up? The only way you can make it up is by taxing poor people and the middle class more. And that does not sound like the most wonderful idea in the world that we live in today. So this is totally different than the debate about should income tax rates be a couple % higher or lower, or capital gains rates be a little higher or lower. This is talking about a very radical shift of more wealth to the very, very, very top Americans.
What do you say, Leon?
Well, I say that Warren Buffett pays less income taxes than his receptionist, and that's a good example of the very, very wealthy, and I think Peter might agree with me, the very, very wealthy can reduce their taxes through a lot of different strategies. The middle class is who's getting hit the most, And I would also suggest to Peter that if we gave a deduction, like we said, anything under $54,000, there's zero tax, and then have a 17 or a 22% tax above that might accommodate the thing. The numbers could work. And I just think the simplification and the fairness of it makes a lot of sense.
I'm curious, Leon, what you think a fair rate would be. If you're looking for a single flat rate, what would it be, do you think?
It's probably around 20%. Peter's probably right. 17's been bandied around, and that won't get rid of our deficits, and it won't solve our problems. And people have to recognize that we need to run our government, run our society with taxes.
Peter, what about the issue that a number of people have raised, that a flat tax would simplify things, putting aside your point about income inequality, but it would simplify the whole system?
So, I mean, the idea of the flat tax, the simplification argument, to me, doesn't tie with reality. So what is true is it's simple in the fact that there's no more deductions, there are no more exclusions and exemptions, there's no more homeowners deduction, there's no more 401k deduction, there's no more charitable deductions. So does that simplify the tax return? Of course it does. So you could get rid of your 100-page tax return and make it be one page with a flat tax. But you can do the exact same thing with a progressive tax that no longer has deductions and exclusions. These are one issue being used to cloud another one. So the idea that a flat tax is simple isn't correct. Getting rid of all the deductions and exemptions is what makes it simple. Can the first page of your return say, if you make $1 million, you pay 35%, and if you make $10,000, you pay 10%? Yes, that's not a lot of complexity. Separate, the issue we were talking about earlier, it's true, Warren Buffett doesn't pay a lot of income taxes. And I saw earlier on your segment, you have somebody, I can't remember who it was, proposing a higher capital gains rate.
Right.
Separate from the income tax issue, wealthy people are the ones that own things that are taxed at a capital gains rate. They own stocks and they own real estate. So that's the reason Warren Buffett, Jeff Bezos are not paying a lot of income taxes. Yes, it doesn't solve the problem for them, but that has nothing to do with why or why not we should have a flat tax. That's an argument of should the capital gains rate and the income tax rate be closer together, which is what Warren Buffett's proposed.
Very good. We wish we had more time. We could go on, I know, but we must stop at this point. Leon Lebrecht from Sequoia Financial Group, Peter Maluk from Creative Planning. Thank you both for joining us tonight.
Thanks, guys.
Kroger's online push pays off. That's where we begin tonight's market focus. The nation's largest supermarket chain reported higher sales thanks to investments in its digital operations, drawing in new customers. But the CEO would not reconfirm the company's financial targets, and that tempered the gains. Shares were up just a fraction to $25.59. Walmart is expanding its subscription grocery delivery service. The cost, $98 a year, which is a little more than half of what Amazon services cost. Walmart will start the deliveries in 200 metro areas, and the stock rose a fraction on that to $116.92. Investors frowned on Smile Direct's debut. The company, which sells direct-to-consumer braces, priced its IPO at $23 a share, which was above expectations. But the stock opened for trading at $20.55, and it closed down more than 27% to $16.67. General Electric's chief says he expects asset sales to bring in about $38 billion, and the company will use that cash to pay down debt. CEO Larry Culp said 2019 is progressing as planned and that its struggling power division is gaining some strength. GE shares fell about 1% to $9.26.
Honeywell's CFO warned today that he is seeing softness in Europe and in Germany in particular. He backed the company's financial projections, citing strength in its aerospace business, but overall, he did say he remains cautious. Shares fell more than 1.5% today to 168.63. Activist investor Carl Icahn has now increased his stake in Hertz to 30%, making Icahn and his various affiliates Hertz's largest shareholder. That stock is up about 20% so far this year, and it rose another 3.5% today in trade to $14.91. And after the bell, Broadcom topped Wall Street's estimates but missed on revenue. The company is facing a slowdown in chip demand due to the trade war with China. Shares fell in after-hours trading tonight but did close the regular session up a fraction to 358.
So how many packages arrived at your doorstep this week? 1, 2, maybe 5? As more people shop online, there's a greater need for workers to package and ship those boxes. And that's where companies like DHL come in. And it's making high-tech changes to keep up with demand. Frank Holland is in Chicago.
DHL wants this robotic arm to give it a leg up in e-commerce.
You know, this will be fully programmed. It'll have stock inside, and it'll take it to another robot.
DHL e-commerce CEO Ken Allen says robots that collaborate with workers will help the company compete in fulfillment, where online orders are taken from a warehouse, packed and shipped. This robot that helps define and even carry products inside of a warehouse is a big part of DHL's innovation push, along with this virtual reality program that reduces training time and increases productivity for human workers.
The growth of e-commerce internationally is now outstripping the growth of e-commerce domestically. So over the last 5 years, it's grown at a compound 25%. There's a massive shortage of people that are working in the fulfillment space, and the demand for labor is going to grow exponentially.
There will be demand for more than 228,000 new logistics workers in 2020, according to one estimate. 180,000 new workers have been added on average over the past 5 years.
If you want, you know, the latest Nike sneaker, or you want a suit or whatever, you know, that stock has got to be able to be picked and packed in that location overnight. And, you know, to put people in there to do that's going to be hellishly expensive if you can find them. And therefore, that sort of whole robotics idea, in my mind, is in the fulfillment arena.
As demand grows for fulfillment operations, so does the competition. Fulfillment for small and medium-sized merchants is a $37 billion business for Amazon. FedEx and UPS also offer the service.
Confirm.
DHL worker James Woodson says these robotics have made his job easier.
You're a lot more efficient, you're more productive, and with that, you're able to get more work done.
DHL plans to install these kinds of robotics in 80% of U.S. warehouses by 2021. A high-tech transition to capitalize on a high-growth industry. For Nightly Business Report, I'm Frank Holland in Chicago.
And coming up, fixing flood insurance.
I'm Contessa Brewer in Wilmington, North Carolina. This neighborhood is considered a minimal flood risk by FEMA. And yet this time last year, the street was underwater. Coming up on Nightly Business Report, why private flood insurers might do a better job assessing risk.
145 CEOs are urging the Senate to pass gun control laws. The chief executives wrote a letter asking lawmakers to pass background checks and called gun violence a public health crisis. The letter was signed by the CEOs of Uber, Levi Strauss, The Gap, among others.
Hurricane Dorian devastated parts of the Bahamas. It also hit some coastal states hard, leaving homeowners to dry out. And once again, it put flood insurance in the spotlight with all of its high costs and perceived deficiencies. But now a group of startups say they can fix that. As you saw, Contessa Brewer is in Wilmington, North Carolina for us tonight.
Hurricane Dorian's floodwater still laps at Sue McKenzie's Wilmington garage. A second hurricane in less than 3 years since she moved to North Carolina from Pittsburgh.
And Florence came into the house and did significant damage.
But McKenzie weathered the storm better than her neighbors because she'd bought a flood insurance policy, though she doesn't live in a FEMA-designated flood zone. Neither does John Meyer, though he's got the pictures to prove how swamped he got in Hurricane Florence.
John, are you anywhere near a river?
Nowhere near.
Are you anywhere near the ocean?
It's about 6 miles from here and about 30 feet lower.
Did you have flood insurance?
I did not. I have the deed and the survey from a mortgage back in the 80s. It has very clearly stamped on it, this property is not in a flood zone.
For years, big insurers avoided offering private flood insurance. It was seen as too risky. But now insurers are moving beyond FEMA's famously outdated flood maps and using new tech to analyze the data and the risk. Chubb says it factors in property characteristic details, mapping and modeling intelligence to measure exposure to surface water and storm surge. New tools and scientific data to assess individual risk.
That house has a completely unique profile from that house, The water floods differently, the elevation is different, the historical losses are different.
Jim Albert started Neptune Flood Insurance 3 years ago.
No one thinks they need flood insurance.
He and other insure-tech startups are flooding the market with new products using algorithms, specific climate data, high-tech water flow modeling. Albert says he can offer homeowners a truer picture of their vulnerability and do so faster than FEMA.
You can enter your address, and in 2 minutes, you can have a quote.
The trend toward digital insurance and individual risk assessment is fueling exponential growth. Neptune is on track to grow 400% year over year and just announced a partnership with the world's largest property and casualty insurer, AXA XL. Nationwide demand for flood insurance policies has grown from 12% in 2016 to 15% last year, according to the Insurance Information Institute.
At one point it was 10% of my book would ask for flood or needed flood, but now it's definitely probably a quarter of my book.
Still, many homeowners don't carry coverage. According to Verisk, 61 million homes are at risk of flooding. That's 5 times FEMA's assessment. And only 5 million homes have a national flood insurance policy. Armed with better science and advanced tech, insurers are rushing to meet the need. In Wilmington, North Carolina, Contessa Brewer, Nightly Business Report.
Here's another look at the day on Wall Street. The Dow Jones Industrial Average rose 45, NASDAQ added 24, the S&P 500 was up 8. And that is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.